Good morning to everyone. I'm pleased to have this opportunity to talk about the HIRE Act. As many of you know, this is a brand new piece of legislation that just went into effect in the last couple of months, and it is an effort by Washington, D.C., by Congress and the President to create some incentives for employers to hire additional employees. So what I'm going to do today is go through what this HIRE Act means, what those incentives and business credits are that employers can take advantage of. I'll be going through that step by step, hopefully, and you'll have a better understanding what all this means by the time I'm finished. This is a piece of legislation that was really presented by and signed by President Obama just in the past few months. It was something that was designed to promote increases in hiring in the private sector, and his idea was to try and really create some opportunities, some incentives, some ways to restart the engines here in the United States to create impetus for America's businesses to really get going and hire more employees. So in terms of what the HIRE Act is, the HIRE Act stands for the Hiring Incentives to Restore Employment Act, and it really has three components to it. One is to provide a limited payroll tax hiatus, or it's sometimes called a tax holiday, for employers to encourage them to hire new workers, and I'll explain a lot more detail about that in a few minutes. Then it also creates some business tax credits, some incentives for employers to retain those employees who they hired and for whom they already received that payroll tax holiday. And so we have the tax holiday, the tax hiatus, as well as the tax credits. And then lastly, it created some early tax write-off opportunities on certain investments for employers. And I'm going to just tell you a little bit about that right now, because my focus is really going to be today on the first two items, the tax credit, the business tax credit, as well as the payroll tax hiatus. But in terms of that investment, in essence, what this piece of legislation did was to create an opportunity for employers to deduct during this current year a write-off, basically, for investments they make in certain business machinery and equipment. And instead of depreciating that equipment over a long period of time, this piece of legislation allows employers to have an immediate write-off this year of up to $250,000 for the purchase of certain machinery and equipment. So since that's more of a tax issue, I'll say, or an investment issue, I'm not going to focus on it today, because I think our focus today should be on the payroll tax holiday and the business tax credit. This piece of legislation was signed by President Obama on March 18, 2010, so it's very new. And so it's something that we all need to learn a little bit more about. In terms of the purpose of the HIRE Act, the incentives that were created by HIRE were intended to encourage hiring and employment by qualified employers, and I'm going to explain more about what a qualified employer is. And it provides basically employers a break on the part of the Social Security taxes that it normally pays. So that's the first part of this incentive, is to give the employers a tax break. And then it created the further potential for business credit for retaining qualified employees, and I'll explain in a few minutes what a qualified employee is, for at least 52 weeks. And so this piece of legislation really is going to be most helpful to employers who have the immediate capacity and hiring needs. For those who really need to hire employees right now, or even in the past month or so, as well as continuing through 2010. That's the period that this is going to be most helpful for employers. As we move through this calendar year, because the tax credits and incentives are going to be applied and available to employers on a payroll period by payroll period basis, the benefits will begin to dwindle toward the end of the year as well. So the sooner you're able to take on new employees and to take advantage of these incentives and credits, the better you will be off financially. So really it's designed to kind of put you in a position where you can hire quickly. The goal, as stated by Congress, is to get Americans back to work as soon as possible. And again, it's aimed at providing those hiring incentives to restore some of the jobs, at least, that were lost during the economic recession. So first of all, let me talk a little bit about the payroll tax break that the HIRE Act offers. Basically what it does is to allow employers the opportunity to not have to match their portion of the Social Security tax, of the FICA tax that it pays for every employer based on the wages those employees earn. So we know, and I'll go into this in a little more detail in a minute, but we know that generally speaking, as an employer, you have to pay a 6.2% match of the Social Security contribution that employees also pay for the wages that they earn. So this payroll tax hiatus is giving the employers an opportunity to not have to make that matching Social Security payment. It will be applicable to employees who are hired, workers who are hired after February 3rd of this year and before January 1 of 2011. So it's in essence running from February 3rd through the end of this year. And it'll be applicable to wages that are paid between March 19, 2010 and the end of the year. So there's two components in terms of the applicability of this tax benefit. One is in terms of when they're hired, but then also in terms of when the wages are paid. And I'll explain that in more detail as we go through. But it is important to focus on that paid component of this and not just when they were hired. So that's just from an overview perspective what the payroll tax break is. Then on the other incentive is the business credit incentive. From an overview perspective on it, it's going to apply to an employer who hires a qualified employee during this tax year and continues to employ that person for at least 52 consecutive weeks. And you have to continue to pay that employee wages for the last 26 weeks of the period that are at least 80% of the first 26 weeks of the period. I think the goal there is to avoid a situation where an employer hires one or maybe a bunch of employees to take advantage of the initial incentive, the payroll tax break that I talked about a few minutes ago, and then have them on the payroll for a while and then start to reduce their wages. This part of the incentive is aimed at trying to get employers to make good hires for people they really need, who they can continue to employ for those 52 consecutive weeks and continue to pay them at least 80% of the wage that they were paid during the first 26 weeks that they were hired. So I'm going to talk a little bit more about both of these, both the incentive and the credit as we go through. But let me go ahead and start talking about what some of the qualifications are to take advantage of these opportunities. One is we have to look at who is a covered employer, which employers can take advantage of this opportunity. To take advantage of it, the employer must be considered a qualified employer. Fortunately, it's very easy to be a qualified employer. There's really not much an employer has to do to quote-unquote be qualified, because really any private sector employer, either profit or nonprofit, is a covered employer, as well as any public higher education institutions. So colleges and universities as well are qualified employers. There's nothing that you as the employer has to do to put yourself out there. There's no application you have to submit. There's no qualifying process. You are a qualified employer.